Why are you already sharing screen? We haven't even done intro.
I'm not cut out for this podcast production game. There we go. Hello, hello, hello.
Yo, welcome to the Superteam podcast. This week, I, along with Akshay, both are grumpy. We have Cash here with us. We are going to go through this week in crypto. Welcome to the podcast, Akshay.
I'm just happy that you're grumpy, to be honest. That's it.
I'm very grumpy because Akshay woke me up at.
I just like that you're
He
upset.
woke me up at 5:30 in the morning today, bro, for a call that I didn't need to be on.
I think the person who was on the other side of the call will probably understand which call it was. So can you not do this?
After the call, he's seen me have coffee on the call. After the call, he messaged saying, "Hey, do you want to chat on Zoom or are you going back to sleep?" After he saw me have one full cup of black coffee, are you going back to sleep?
This is like couples therapy at this point, honestly. All right, we got 4 categories of tweets today. We're going to start off with cool.
Yo, so the first big news is that Armani and Coral's backpack project is now open source.
This is like the spiritual successor to, I guess, the Solid wallet, which is the first open source wallet on Solana.
Tell me, why is this such a big deal? I am small brain. Why is this so massive?
I think in general, open source projects in Web3 are killer. There's that old line that like every smart contract is a bug bounty. And the best defense is like just to be fully transparent and fully open, right? So when the code is open source, like XNFT has done now for Backpack, hopefully it makes it more secure, and it also kind of furthers this general cultural shift that we want more things to be open source. When things are open source, it also means that other people can fork them and build cool things on top of them, build variants of them. And that type of kind of ability to exit, I think, is really important in Web3. And then it's also just opened up for developers. So if you're a dev, you can now go see how Backpack works under the hood.
You can go watch our episode with Armani. XNFTs
It does deserve a deep dive, and we did one.
You should go check it out.
And then speaking of XNFTs, one other use case that a boss found this past week.
A cool use case for XNFTs, default collection preferences. For example, suppose a creator wants his collection to be sold on one's own marketplace. The creator can simply add a bundle to each piece in its collection to always list on the marketplace by default.
This is super cool. This is putting power back in the hands of NFT creators. Like we talked a few weeks ago about the whole royalty issue where creator royalties are not necessarily being respected, right? They're kind of suggestions right now. But this is another way to kind of give more leverage to NFT creators, even though the royalty situation is starting to shift up. It's just like one example of something that's just technically not possible without something like XNFTs that now is possible.
All right. This is a space that Jump has opened up in Chicago. I was in Chicago. Basically, anybody building on Wormhole or Pith, which are Jump's sort of middleware protocols, can go and work out of there. I think they're also hosting a hackathon in the coming month. We saw how our friend Gajesh participated in the open source ecosystem and eventually ended up getting an internship at First Solana Labs and now at FTX in the Bahamas. And so if you're a young developer who is ambitious and looking to break into the ecosystem, the cross-chain hackathon that they're hosting might be a good place to start, because this is one of those things that's going to be big in the coming months, but not enough people have heard about it yet. So you still have the opportunity to be early.
Many of you want to grow up to become Gajesh, which is ironic, but very funny. It's a good sentence. Anyway, let's move on to the next tweet.
Do you think that we are doing disservice to this podcast by making it useful?
Yeah. Ever since I found out that CZ is now, I was just wondering at what point will we see the Binance logo show up on Burj Khalifa?
Or FTX is branding stadiums and Binance is branding the Burj Khalifa. So,
I now know 2 people who have been projected onto the Burj Khalifa. One is Shah Rukh Khan on his birthday, and the second is ZZ. Both of who follow me on Twitter. So cheers to me.
how did you manage to make this about yourself? How did it, like? I thought we're going to discuss how this is such a big moment. They said like Dubai and allowed for this to happen. They are announcing the fact that they're regulated in a country That's like some states breaking away from this party line of ban crypto or leave it unregulated to, but you, my friend, found a way
To make it
to
about
tell us
this guy.
that CZ and Shah Rukh Khan follow you on Twitter.
Obviously we all believe in the power of crypto and how it's going to change the world. And I think some countries are getting up to this, but being like the ground zero for crypto over the next decade is probably like $1 trillion opportunity for some country, whichever one picks it up. And right now it seems most countries are too scared either of US hegemony or for other reasons to actually adopt it fully. So shout out to Dubai for kind of being forward facing here.
But yeah, good, awesome for Dubai. I love Dubai. Big fan. Golden visa holder. You're right here. Love you all.
One of the biggest kind of ecosystem things to happen in Solana in the last few months here, Helium, which is previously had its own kind of blockchain to power their Internet of Things mobile networks all around the world, has now officially moved and is taking advantage of Solana. Proposal HIP 70 to actually join up forces with Solana and move their infrastructure over. Massive.
Shout out to Binance, who celebrated dumping the wrong token by putting their logo up on Burj Khalifa. Shout out to them. Can you explain what this joke means, Cash?
So basically, at the same time the governance vote was going on, Binance ended up fucking over Helium a little bit. And really the time when they could least afford to get fucked over. Basically, there's two tokens in the Helium ecosystem. One is called HNT and the other one is called Mobile. The important thing to know is that Mobile is worth like 1,000th or 1/10,000th of one HNT. But for some reason, between these dates, as our guy Arman over here has pointed out, anyone that deposited Mobile tokens into Binance US were credited with HNT tokens. So this is just absolute debacle here. You can see the window and you can see how it affects the price because everyone woke up and suddenly had, thousands or tens of thousands or hundreds of thousands of dollars of tokens they did not expect to have. So obviously they dumped them basically immediately. Relatedly, another big piece of news for Helium, they have partnered up with T-Mobile in the US. T-Mobile, one of the biggest telecom groups in America. And now the People's Network works alongside with T-Mobile. Pretty cool, right? So basically what's happening here right now is that Helium allows anybody to pick up these Helium miners, which basically are nodes in their network that provide, internet access, let's say. So for anyone who's using the Helium network, Helium Mobile here, and is in a spot where there are no Helium nodes that can give you internet, T-Mobile can step up and provide service there. So you kind of have continuous coverage, whether it's from Helium or T-Mobile, it all feels and looks the same.
So Helium is in some ways, I guess, subsidizing coverage for its users by partnering with T-Mobile. T-Mobile is like, why would I say no to free money? And I definitely don't see this as a threat to ours.
T-Mobile and Binance mobile token stakers shake hand.
So now we move on into everyone's favorite section, WTF, what the fuck? Starting off with this major Wintermute hack. Wouldn't be crypto if we went a week without talking about a hack. This one was for about 160 million that happened last week. So this happened just about a week ago. But what I think is so interesting about this, it's obviously sad that there's another major hack, but they got hit for 160 million. Their DeFi wallets got hacked because of this weird wrinkle in the Ethereum kind of network. It turns out that if your wallet address, right, that long string of numbers and letters, if it has a lot of zeros in the beginning of it, you pay less in gas fees, right? And the amount you're paying less is like very microscopic. But if you're a market maker like Wintermute, those little microscopic savings add up to be pretty big over time. So Wintermute used this tool called Profanity to generate an address with 7 leading zeros, right? So it was just 00000, whatever else it was. And because of that tool that they used, they were eventually hacked. Profanity had a bug that was known, I think 01 and many others kind of flagged it a week or two ago, that, hey, there's a potential bug here that if you use Profanity to generate this wallet address, your keys are at risk. And that's exactly what happened here to Wintermute. So a very funny and weird bug that came up that ended up being very, very costly for them.
Yeah, $160 million lost. Very funny, Cash.
Yeah, we've reached the point in hacks in crypto that it's
hilarious.
It's like, oh, by the way, guys, new hack, but this one's interesting. Let's look at why this is interesting. Rockwell Shah tweeted out that you can't guess what the number one blockchain by daily active addresses is. And of course, the correct answer is Tron. Of all chains, it's Tron. No one would have guessed that.
And it's not even close,
Yeah,
actually.
it's
Tron is absolutely crushing it.
more than twice the person closest. Oh, but it's interesting. Solana's closest to Binance Smart Chain.
Yeah, so Solana, as you would expect, Solana, because it's cheap and fast, it has a lot of adoption among users. Where Tron's usage is coming from, these crazy numbers, is because it turns out that it's the second highest stablecoin market cap that's out there, right? So they have a lot of people using their network for low cost stablecoin transfers.
This goes to show that crypto is so much bigger than crypto Twitter.
Yeah.
And none of these people probably care about what crypto people think about
Correct.
where they're storing the network, because if they were on crypto Twitter, they'd get yelled at for using
I just
decentralized server.
shout out to all 7 validators on Tron who probably make so much money by validating these transactions. Shout out to all of you, man.
So speaking of Tron, though, if you thought that was kind of what the fuckish, I thought this was even more what the fuckish. Here's a little surprise of a token that's bigger than all of Tron. Most active addresses. We just said that, right? You know what's bigger than them by market cap? Fucking Shiba Inu. Shiba Inu is now the 10th biggest. This is a little bit out of date, so they might be, I think, 11th right now, but they're still ahead of Tron.
Fucking Dogecoin. Dogecoin is ahead of Polygon, bro. What is this?
So we either have 2 meme coins either in the top 10 or just about in the top 10, which is absolutely bizarre.
All right, moving on to the LOL section. Our first tweet, of course, is an update on dear friend Do Kwon. There's an arrest warrant out for Do Kwon. Korea's financial security crime team found evidence of fraudulent transactions in the form of investment contract securities.
So the arrest warrant goes out for Do Kwon, and then Do Kwon, as always, comes on to Twitter and does his thing.
To be honest, haven't gone running in a while, need to cut some calories. Oh my God. Oh my God. He doesn't give a fuck.
And he maybe didn't give a fuck, but as of a few days ago, now there is officially a worldwide warrant from Interpol calling for his arrest. So we're going to see how far this actually ends up going.
Oh my God. I think in the last interview, he said he was in Singapore, right? Like they literally showed his building and all.
Yeah, so I mean, this story is going to come to a close pretty soon. I can't imagine that Do Kwon has a lot of time as a free man left.
Really? You think so?
I think so. I mean, if the entire world is now available to arrest him, it seems like he's going to have a pretty tough time hiding. All right, the last one here is just a funny thing for anyone who's been watching. Most of Twitter has been obsessed with the decline of the British pound. Here's a little
this was so
price
fun
chart
to
here.
watch. Oh my God.
Things are bad things are bad if you're not holding dollars. The dollar is very strong against everything, but the pound has fallen exceptionally against the dollar. So it's fallen even more than the rupee or more than other currencies.
Dollar to INR is also at dollars. Dollar has never been stronger compared to INR.
Almost 82.
Yeah, this used to be what the pound used to cost in rupees.
BD, you want to explain the dollar milkshake theory? This could be a fun place to do that.
Yeah, we're actually bringing on Rahul Paul on the show in about a week or so from now to discuss this. But so people should try and catch that. But I think the reason this happens is, again, this is my gargled explanation of this, but because the entire world is drunk on dollar denominated debt. So they need dollars to pay it back, right? And when the Fed steps back and stops easing, you generally reduce dollar supply. You've stopped supplying dollars and you've raised interest rates, which increases demand for dollars because people want to park their money in dollars because they're getting paid more. It sends the demand for a dollar higher than the global monetary system can handle. And so now you have people scrambling for dollars because A, interest rates are higher, and B, because they need dollars to pay it back. So now we're in this weird situation where there's an abundance of dollars in the United States causing CPI inflation, right? Consumer price inflation. And there's a scarcity of dollars in the global monetary system causing dollar deflation, or basically or the DXY, which is the strength of the dollar against a basket of currencies. So if you look at the strength of the dollar, it's just gone up only, and all of the other assets in comparison to the dollar have similarly gone down only, right? Since that has happened. So I think everybody's waiting for either the math or the politics to break. Maybe some part of the bond market breaks and they have to ease again, or they stop raising rates and hopefully this gets better, or the politics means just that a lot of people's savings are going to go to zero if you continue doing this. So Yeah, we'll see what happens.
Do you know why do they call it the dollar milkshake theory? Like, why that name for this?
Yeah, I think Brent Johnson came up with it. He's at Santiago Capital on Twitter.
It's also because it brings all the boys to the yard.
Oh my god!
Ben Johnson is a big Khalees fan, obviously.
Our next tweet is by Ujwal from the DAO. Shout out to Ujwal.
Nope.
Oh.
Found by Ujwal, not written by Ujwal.
I know it's not written by Ujwal. I said it's from Ujwal.
But you said it's from Ujwal, though. You said like it.
Of course, Ujwal didn't write it, bro.
Bro, you and I know that because we know who Ujwal is, but I'm saying the average listener might not know, right?
Oh my god.
Please keep all of this. I just want people to understand how dysfunctional this is.
Why do you give me the responsibility of giving a shout out to whoever's name you put in there when you don't want me to?
Yeah, you credit it. You fucking credit. You write it in the way that.
Dear podcast listener, before this started, I said, hey, Tanmay, when we share a tweet, just say, hey, shout out to whoever's in
And
the
I
source
give
column.
shout out, and you're
That
like,
was all.
it's not written by Ujwal. Don't give so much shout out also. Anyway.
All right, so this next tweet here, first in the O section, some thought-provoking tweets here. Sourced by Ujwal, just around financial markets, so a little bit more macro talk. And I'll throw this over to Mr. Macro, Akshay BD, to talk us through.
Come on, Mr. Macro.
You shared this one in our group
This is
chat,
like a
so I thought you
thread.
want to talk about it. Yeah.
Right, but this is like an entire thread. I mean, we should just put the thread up for people to read, but it basically explains the fundamental problem of why markets are behaving the way they are and the problem that faces our generation, which is the generation prior to us and the generations prior to us borrowed a bunch of money and spent it. And now there's no way to give it back. So now you have a few options, right? If you have borrowed more than you make, what do? Well, you can declare bankruptcy, which means you default on your loan. That's not an option because it's if a sovereign country like the United States or any of the sort of like Western liberal democracies default on their loan, like that makes it's a massive confidence destroying move, right? So they're never going to do that. What else? What is the other option? Well, you try and grow your income, right? Kind of like allow for innovation, allow for the economy to get back on its feet, and hopefully growth gets back. And if growth comes back, you have more income, then you do have debt and you can somehow pay it back. But debt is so high, it's just magical numbers at this point. You'll see US national debt is, I think, 92 trillion or something. So, and then you have, well, what else do you have? Then you have austerity, which means you save, you spend very little and you pay back debt. Well, the entire American society is built on consumerism and like consuming stuff, and this sort of like this demographic call option on young people going out and starting families. So that's probably not going to be a thing. The economy will collapse. So what other option do you have? You print money and pay back the debt, and effectively the cost you accept for this is inflation. So people who have money or who have financial assets will benefit disproportionately from the money printing, and people who don't have financial assets will disproportionately be impacted by this because their income today is actually worth less in 6 months from now than it is today, and it's only going to get worse, right?
It always like Akshay just comes up with these depressing theories, and I just get very depressed. Like all like world is.
I didn't come up with this. It's a Twitter
Everything
thread
is
we're
sad,
discussing.
we're all gonna die.
I did not say the world is
We're gonna be
ending.
broke.
I didn't even pick this Twitter
countries will
thread.
cry,
I'm simply
countries will
commenting on
cry,
what was
bro.
presenting to me. You called me Mr. Macro and put me on the spot and asked me to explain it. I was hesitating because I was like, wow, this is a downer. I did it anyway because not only did Cash put me on the spot,
Does anyone call you ever to a party? Like, is this what you do at parties? Enjoy your drink. Your prime minister is going to cry
going.
on national television in 7 days.
Our first podcast walkout. This one, it took me a second to kind of like really appreciate the wisdom of this. But SBF said, with the world thinking differently about crypto price moves if they measured it versus world currency baskets instead of just USD? It's a little bit of I guess it's true, right? You denominate Bitcoin and Ether and all these other assets primarily in USD. And yes, their USD prices have fallen, but so have all other currencies, right? So if Bitcoin has fallen less than, for example, the British pound over the past year, then it's actually been a good hedge against holding pounds. The fact that we denominate crypto in USD makes some of the price movements look worse than they are in environments where the dollar is very strong.
Like, so if you bought Bitcoin using pounds and then you sold it to USD, that's like, there's like an arbitrage there, right? Like,
Yeah. Or even if you just hold on to it, you buy it with pounds and then you just hold on to it instead of holding pounds, you are down less relative to the dollar. And so your wealth is actually preserved by buying crypto in these ways. Basically, if all currencies start trading like shitcoins, then non-shitcoins like Bitcoin and Ethereum and Solana and others have, additional value.
Serious question. What is the value of funding another alt L1 if block space is already cheap and getting 10 to 100x cheaper via ETH scaling in the next 12 months? Oh, this is with all ETH scaling solutions all at one place.
So the next major upgrade to the Ethereum protocol is, God, I always forget the number. It's EIP 4148. Is that what it is? Anyway, what it's going to do is basically create individual fee markets for rollups, right? This is a part of Ethereum's overall vision to be a rollup centric protocol, right? So Ethereum is the base settlement layer and all the actual execution happens on these different rollups. As a result, we're seeing already the fees are very cheap for these rollups, and they're only going to get cheaper. And then you also have alt layer ones like Solana and others, where gas fees are basically negligible. So the question that Vance is raising here is that, hey, there's a lot of alt L1s coming, but kind of what are they going to do? What is their kind of real value add to the ecosystem if block space is already so cheap?
Yeah, this is sort of like, so Hasib from Dragonfly had this analogy, right? That L1s are like cities. I think if you take that analogy further, it's like if you think about how cities were started, somebody just started with a bare plot of land and said, we're going to turn this in New York City or we're going to turn this into Singapore. And the distance between Singapore and, like the southern border of Malaysia and is maybe like 20 kilometers. But the distance in the quality of the economies and what has happened in those two regions are ginormous, right? And so I think we're at such an early stage where everybody just has a piece of barren land and they're trying to convince everyone to come and build. And they're like, hey, why do we have so many redundant barren land mayors instead of just having one? And I feel like that competitive spirit is good, because if you had just one piece of barren land and a mayor to that land, and like they're not incentivized to build fast or bring innovators faster into their city and have them build the restaurants and the parks and the theme parks and hotels and companies, etc. in that city, right? And that's what L1s are doing. They're trying to get developers to come onto their chain and build businesses. And it feels like our friend here is suffering from a slight bout of ETH maximalism.
Yes. It's also if we just wait for ETH to ship and it to work, haven't we already done that for 7-8 years? Like,
so I think that, like, for me, there's some kind of resonance with like the Chinese housing market, right? Where China wanted this hyperscale growth. They built all of these massive condos and apartment complexes in these tier 2 and tier 3 cities all across the country in the expectation that there would be people to live in them and then build those local economies, right? But the thing is, they built too many. There was just not enough people that needed all of those spaces to live. And as a result, now there's like a potential housing crisis brewing in China. It's already kind of started, depending on your perspective. These alt layer ones kind of have a similar role, right? Is if you keep building more and more block space or creating more and more block space, you need users at the end of the day. Otherwise, the block space is useless. So the fundamental question is, if your alt L1 can create a new use case or draw in a new audience that for whatever reason cannot use existing block space, then maybe they're valuable. But just another L1 for the sake of having an alternative L1 because it's 20% faster or something like that, not going to be enough, I think, to create like a long-term advantage. The last, a tweet of the day.
It says, reasons crypto innovation will happen outside the US. Greater impact in regions blocked from global financial access, collapsing currencies. 96% of global talent lives outside US. SEC security laws. Reasons crypto innovation won't happen outside the US. VCs. Ooh, why do they say VCs will prevent?
All the VC, or not all the VCs, but most of the VCs are still US centric, right? Are Western economy centric. So they prefer to invest in Western teams. They prefer to give that funding ability to those teams that are from America, which is why we see so many American centric projects, even though I think there's a good argument that crypto is largely an emerging markets story, right? Again, by like usage, by developer adoption. We're seeing this in India and Vietnam, Indonesia, other markets like that. So the thirst is there, the use case is there, but all of the funding is still in America. And that's probably the major reason to be bearish global crypto development.
All right, on that happy note, we'll see you guys.
This was a depressing episode overall. It's been a depressing week,
It wasn't that depressing also. It's just Akshay spoke, so it felt a little. But this time,
Go ahead, finish.
but like, how do you get American venture money to go across the world more? Like, what's the playbook?
I don't even think this. I don't know why we're discussing this. I feel like this tweet is just not. It's not an interesting thing. Neither is it true. And to David's credit, I love David Phelps' Twitter account. You should go check his account. He's actually really insightful. Like just as yesterday, right? Like Dragonfly opened up an office here in Singapore, and I was at that office, and there's obviously a lot of energy in and interest in funding teams outside of the US because there's like 30 funds in the US, whereas not a lot of funds operating outside of the US, and so people have to go further into the frontier to find, as they like to call it, alpha. And so I think I don't know. I haven't seen even within our experience, like good teams that build cool stuff have never had trouble raising. So I don't know. Maybe missing something.
Would you say, but like if there was two equal teams, like one like founder background, et cetera, product at the same stage, same amount of traction, one in the US and one in India, like obviously the one in the US would have a much easier time raising funds, right?
Easier, sure. I mean,
yeah,
if it's a couple of extra steps, but what is, and so what? Like,
so that friction, I think, reduces the pace of fundraising in the outside of the US, which reduces the pace of innovation happening outside of the US, even though most of the adoption is outside of the US.
I mean, the friction of the United States is you have compliance costs that are, incredibly high, whereas the compliance costs in jurisdictions that are favorable to crypto, like Dubai, etc., are very low. And so, this kind of stuff is hard to like compare against each other head to head.
All right, friends. On that note, hope you guys have another fantastic week. See you guys on the next episode of This Week in Crypto. And GG. Bye, Cash. Bye, Cash.